Good afternoon, everyone, and welcome to today's Trader Planet Live webcast titled Analyzing Stock Indexes in a Shaky Economy. This is the latest in a series of live webcasts offered by TraderPlanet.com featuring well-known industry experts. Today is Thursday, February 18th, and we're happy to have you join us today. This is Darrell, and I will be hosting our webcast today featuring Darrell Jobman, a senior analyst for TraderPlanet.com. Today's presentation takes place at a specific date and time, and therefore any opinions given by our presenter may change without notice at any time. Trading involves substantial risks of loss and therefore may not be suitable for all investors, and past performance is not indicative of future results. This webcast is being recorded and will be archived on TraderPlanet.com, so you will be able to review the material at a later time. You can also find additional previously recorded webinars among our other free educational resources within our site at www.traderplanet.com. Our acclaimed presenter, Darrell Jobman, trades his own personal account and has been involved in the financial markets for more than 40 years. A decorated Vietnam War veteran, he has served as the editor for several agriculture publications before becoming an editor of Futures magazine for more than 15 years. He has written and edited more than a dozen books and trading courses on trading. While his mission is helping others succeed by learning the do's and don'ts of trading, his editorial contributions to TraderPlanet.com have really permitted him to amplify this passion through the interaction with our members. We're pleased to have him with us today. Let's give a warm welcome to Darrell Jobman.
Thank you very much, Darla, for that introduction, talking about a subject that almost everybody follows every day, whether they know it or not. They're always looking to see, was the Dow up, was it down? You know, that's kind of the extent of their involvement in the economy, maybe, but, you know, it's kind of an area that is on everybody's mind. Now, the first thing I want to do before we get rolling is to have an audio check to see whether everybody can hear me okay. If you will notice in the lower left corner of your screen, there's a little man. He has his hand raised. There's a menu beside him, and if you can hear me, the audio is fine and so forth, click on the little the menu item that says I agree. That way I can see that everybody is able to hear me. Okay, we're getting some people that can hear me, so it's always a good sign when people can hear what I'm saying. You may not look forward to it or whatever. You may not get some good leads, but I just want to make sure that you can hear what I am saying. Let's clear that. Now let's find out, of the people that are on board here, what type of trader do we have? And if you are a trader who does trade stock indexes, go to that little man and click on I agree. So I know if I have some stock index traders out there, because that's a subject that we're going to be talking about today. So if that's you trade stock indexes, click on I agree. Okay, we've got a raised hand or two. Good. So we do have some stock index traders. We have some people that have some interest in the market and know exactly what's going on. Before getting into that, we want to mention a couple of other things. First of all, the data that I'm going to be using in the charts is brought to you by CRB. They've been around since 1934 or long before most of us have been trading, so they have lots of experience. And secondly, you may want to take a look at your screen there, and if you can put it on full screen mode, it might be helpful as we go through some of the points. You'll also notice there's a little chat box there where you can enter some questions as you go along. You might have some questions in mind, but I'm going to hold them off until the end of the presentation, when I'll try to answer as many questions as I can. But note that there is a place where you can enter those questions. Now we're going to start with the stock indexes, where I usually like to start, and that is with the big picture. You know, again, everybody knows we have the highs that we had here in the 2007, in the fall of 2007, then we had those lows in March. That's kind of the scenario that we have right now. We're at a point in time where we are looking back 1 year. Let's say if we were to look back 1 year and say, you know, kind of what's the situation in the last year? About a year ago, we were right here. We were kind of at a bottom. The government was doing the economic stimulus bill and ready to pour something like $787 billion into the economy. It's, of course, a lot of it has to reach the economy yet, because there's a bunch of projects that haven't started, but the effort was to turn the economy around and to prevent the collapse of the whole system. We're also approaching that one-year mark of the stock market lows in March 2009. Stocks, as you know, from 2009 did manage to go up. A nice big run up here in 2009, a 21% gain. Then after reaching the highs in January, they took a little tumble and dropped back down to the February 5th low on the same day that the employment data came out, February 5th. But now a better attitude. Public has a better attitude. We've weathered through the Bear Stearns and the Lehman Brothers and the Merrill Lynches and the AIGs, a lot of other companies. That's kind of in background to us. It's kind of behind us by now. When we look at the stock indexes, I showed you the E-mini on the previous one, which is the most popular index, and we're going to look at that in more detail a little bit later on the Vantage Point charts. But we also have here the Russell 2000, which is kind of the indicator for the small caps. This particular slide that I'm showing you here is the Russell 2000 ETF, IWM. There are a couple of points on here to note. You know, you have the same types of things going on where you had the lows in March and all that kind of stuff. The same type of thing. The pattern for the stock indexes is pretty similar. In the case of the Russell, you might want to make a note of a line that goes across here where we had some support at a level of about 64 or 65 in in 2008 rather, before the skid started, and we reached that point, got into that point, and then it kind of has turned back from there. So we don't know whether that's the limit. If it's too much resistance to get through, we don't know that yet. But it does seem like we have been able to come through several. If you'll notice on the chart, we have had several of these $7 drawdowns, and we are in the midst or working our way out of another one in the IWM. But the question still remains, have we weathered the storm, you know, the economic storm that we've been put through, or are we kind of in the lull between storms? Are we ready for the next ones? Now the problem is that's pretty hard to answer, and we don't know the answer. I don't know the answer, and I hope you, if you know the answer, you can let me know, but you can't expect to know those kinds of things. But what we can do and look at the situation as to what is different with the markets, or the general opinion about the markets today as opposed to a few months ago. It's like, you know, looking at these kids' picture books where they put two pictures side by side and they say, now what's different about this picture that isn't